Thank you. First of all, an apology. I'm going to have to speak in English. I'm from Britain, and that's all we can do in Britain. Thank you very much to PAGEV for inviting us to come here and speak with you and meet with you at this event. This was the topic of my talk. So let me just tell you a little bit about Moorgate Capital, if you'll permit me. Moorgate is a corporate finance firm, which means broadly that we help people to buy and sell companies, and we also help raise funds, and we advise people on corporate finance matters like management buyouts, as well as disposals and acquisitions. We are unusual in that we have a focus on the packaging industry, which is my responsibility. I have focused exclusively on packaging for 25 years, and we have a panel of senior executives who are from the packaging industry as well, 6 or 7 of them, who augment what we do at a very senior level. So most of the transactions we work on are between about $50 million and $1 billion. We do go above and below that, and we work for financial sponsors, private equity houses, strategic acquirers, public and private companies, and hedge funds and banks and family offices as well. Now, what I'd like to say at this point is that in my 25 years of being in this industry, and we've worked for clients as far away as New Zealand and Australia, the west coast of the States, throughout Europe, also in Asia, Malaysia, and the Middle East. But we've been active in Turkey, sold companies in Turkey. And in my 25 years, I've visited a number of sites in Turkey, and I have to say, actually, some of the best packaging facilities I have seen anywhere in the world have actually been in Turkey. And that includes not just the level of machinery involved, but also the sophistication of the products that are being made. And therefore, it's great to hear that that success is translating into this huge success at Interpack and your export level and so on. So let me move on. So this is what I'm going to talk through. So an overview of the industry and packaging M&A, and then a bit on plastic packaging M&A, look at some recent deals, and then what the outlook is. So moving on, the 2 slides I'm going to do here, this first one and the next one, these are looking at packaging mergers and acquisitions deal volume. And what you can clearly see here is that 2016 was the highest level in over a decade in terms of the number of deals transacted in packaging. And this second slide shows you that 2015 was a bumper year in terms of value. And actually that figure there, that's about $35 billion. That was the highest ever number in packaging mergers and acquisitions by value ever. So 2015 clearly a bumper year. There are 2 things on this slide, 2 circles. The one on the left, that shows you who's making the acquisitions. So the big dark blue section, that shows strategic acquirers. So that's companies who are already in the packaging industry buying other packaging companies. And then the light blue and the red, they show private equity participation in the industry. And the distinction between the light blue and the red is that the red is what we call a platform investment, where private equity come into the industry buying a new company into the industry for the first time, whereas the light blue is PE add-on or bolt-on deals, where they already have a packaging business and they're buying another one to put with it. And what you can see on the right, that shows you what the seller types are, or what the end markets are. And you'll see that in that particular year, 2016, 43% of the deals done were in rigid and flexible packaging. And that's probably what you see year in, year out. It's usually between 40 and 50% of the overall global packaging market is plastics. And these are where the companies are based. About 75%, give or take, is in the developed markets, 25% in the emerging markets, predominantly in BRIC, the BRIC countries. But of course, Turkey is an important part of that grey block there. Now, this next slide, I think you should really pay attention to. This is public company valuation multiples, and in packaging, we always look at, or we tend to look at, enterprise value to EBITDA, EBITDA being a measure of profit, An enterprise value meaning the equity and the debt, if any debt is assumed, that the company exchanges hands for or is traded at on a public market. So what you can see there, great news if you're in plastic packaging, is that the public companies that make plastic packaging trade on higher multiples than the paper equivalents. So if you used to be in paper and you've migrated to plastics, you've probably made the right decision. And these are the enterprise values for transactions, for M&A deals. Now, what you see there, of course, is that the valuation multiple is a little bit lower on deals compared with what it was on those public company multiples. But that's pretty much what you'd expect, because the public companies tend to be massive companies with a lot of liquidity and very diverse manufacturing bases. But even so, as you can see, the enterprise value to EBITDA multiples have been climbing in the packaging sector almost back to the pre-credit crunch levels. And this one's possibly even more important. I went to see a private equity house a couple of months ago, and they said to me, why should we be interested in packaging? We really don't think it's a very sexy sector. And I put a very similar page to this in front of them. And they said, no, we're interested. Now what this is, this data was collected by one of our analysts over the weekend after the markets had closed on Friday. And it shows you the performance going back for the last 10 years to Friday afternoon, Friday evening. Right in the middle there, that blue arrow in the middle, that's the FTSE 100 index. That's the 100 biggest companies quoted on the London Stock Exchange. And the London Stock Exchange is the biggest stock exchange in Europe. And the FTSE 100 is a very disparate range of companies. It's people like Barclays Bank, GlaxoSmithKline, very, very disparate, very big companies. And typically companies in the FTSE 100 have 70% of their income or more from outside the UK. So what you can see is that in 10 years, the FTSE has returned a 30% performance, whereas, well, less than 30%, whereas packaging has delivered over 100%. So I think everybody who's in the packaging industry who's contributing to that, you deserve a pat on the back. So let's look at plastic packaging M&A with a bit more focus on the plastics. Similarly to what we saw in the overall packaging industry, about 60+ of the deals is being done by strategic acquirers and the balance by financial sponsors. And these are the segments that they're buying. So not surprisingly, when you think of the structure of the industry, about 44% is in flexibles, and about 36%, this is last year, was in rigids. And those other areas that we've already heard about today, closures and so on, 10%, and bottles 10%. And these are the multiples that plastic companies are trading on. Look at the yellow areas here. This is rigids here and flexibles there. Now you may not be able to read this, but these are other types of plastic conversion: automotive, cables, machinery, materials, building products, and medical. And what that shows you is all those industries have seen the multiples go up over time, apart from apart from building products. But flexible packaging and rigid packaging have been two of the best performers. So even if you've done nothing, the value of your company has gone up by 20% in the last 3 years. So what I'm going to look at now is the recent deal activity. Now you'll know many of these names. One of the bigger deals that we were involved with going back to multi-packaging solutions, 2.3 billion, mainly a paper deal, so possibly not of interest to you. The second one down, Caroso, family exited to, or partially exited to Actera, a private equity house. That's a pure Turkish deal. Enovia is a differentiated producer of BOPP film. They actually make the film for polymer banknotes, if you're familiar with those. And they were acquired by CCL, which is best known for being a labels player. Again, another labels business, Constantia label, mainly film label, acquired by MCC. And a pure flexibles company there, Techniplex, bought by Genstar. You can see the size of some of these deals that have happened in 2017. They're pretty significant transactions that are going on. So what's the outlook? We heard about these from the panel this morning. There are, in my mind, the things that keep driving this interest, whether it's strategic or financial sponsor in packaging, is these macro and micro opportunities. The macro ones, the world population growing, the rising middle class, there's also the aging population, and with the rising middle class, particularly the growing demand for protein, all of these things mean that we need more packaging. And then you have the micro trends that we talked about this morning, more working mothers, more single people households, people are shopping locally rather than driving to an out-of-town retailer, which means smaller pack sizes, convenience shopping, 24-hour shopping, people go to the supermarket in the middle of the night. In fact, in the United Kingdom, it's become one of the most likely places to meet your next girlfriend. And of course, there's the topic of internet retailing, and that is something we could probably all sit in this room and debate for the next 2 days, but it is a huge opportunity for the packaging industry. And of course, the other things we've heard about today, sustainability. So these are attracting money and they're making companies come together. And here's another trend that I think is massively important. So in 2014, United Biscuits, and this is obviously an FMC. Out its other manufacturing sites, they probably thought, well, we better go and acquire something in Turkey, because if this company is now owned by a major Turkish player, we better have something close to their home. And that's possibly been part of the catalyst that we were hearing about earlier with foreign companies buying into the Turkish packaging space. But interestingly, possibly because of this deal, what we've seen this year in particular is a lot of Turkish companies looking to acquire in the Western Europe and UK. Now that might be because they're thinking, well, if there are companies from Western Europe coming over here to look after our customer because they serve its subsidiary United Biscuits, for example, then maybe we better think about protecting ourselves from an invasion from Western Europe. So we're seeing more Turkish companies looking to acquire businesses and be close to not just the subsidiaries of Turkish companies on the home turf, but also being close to people like Unilever, GlaxoSmithKline, where they manufacture in Western Europe. So the benefit from that is you can supply the bulk of their product perhaps from Turkey, adding to that 40% that's already directly exported, but also you're able to provide them with short-run, short lead time products in the UK or in Western Europe. This is another aspect that's going to drive deals. There's an awful lot of what we call dry powder in the private equity community. Now, what do I mean by this? Private equity houses keep raising funds, and at the moment, at the end of 2016, there was about 850 billion, excuse me, of dry powder, money that they had raised that they had not deployed. How much is 850 billion? It's about the GDP of Norway and the United Arab Emirates combined. And think about it, that's just the equity. They're going to add debt on top of that, and it's going to be at least the same again in debt. And you get a feeling for how much money is running around looking for deals. And those, as I say, those private equity houses are very active now in packaging. But will the bubble burst? I don't mean the plastic bubble, I mean the economic bubble. We're living in a sort of slightly strange situation where there's some subdued economics, and yet the financial markets keep marching on. And David Rubenstein, who's the founder of Carlyle, one of our serial clients, is saying we're overdue a recession. They should come along every 7 to 8 years. So where is the recession? So in summary, packaging has strong macro and micro fundamentals that are going to keep attracting investors and making people want to put their capital to work, whether they're strategic acquirers or financial sponsors. Hence, we'll continue to see strong M&A activity. from both those parties, strategic and sponsors. Valuations remain strong. As you've seen, the plastic ones have advanced 20% in 3 years, and that's partly driven by this low cost of capital down to quantitative easing. But if there's a recession, you'll probably see valuations start to tail off. So if you're thinking about selling, it might be better to sell a company sooner rather than later. Thank you very much.